KQQQ, the ETF for income and growth from the Nasdaq-100. Is that even possible? Income and growth? Well, we're going to break it down today to tell you, is it really true or is it not? Can you get income on a monthly distribution? Can you get growth from the Nasdaq-100? Can you get a balanced approach? Smarter strategy and getting exactly what the active management can do for you. We're going to break it all down today. Welcome back to the channel. I'm Doug, the Retirement Guy, with all your monthly ETFs. So we're going to break down KQQQ to see what the actual happens underneath the hood and give you the insight, the good, the bad, and the ugly. So before we do, I got to say a shout out to all of our Patreon supporters. Thank you for supporting the channel. If you can all help the channel at all, don't be afraid. Go down in the description, hit the Patreon button, and you can join for free. We get a lot of information behind the scenes. We're always adding more stuff to it. You can be a small little sponsor. Just hit the one-time fee or join on a monthly basis. All of it helps the channel keep giving the information that we need and that we want for you down the road. You also want to help the channel? Hit that like button and also be a subscriber. Join over 13,000 of you that have already joined this revolution of learning about ETFs. Let's get into today's video. We do have to do the disclaimer, and that is past performances don't guarantee your future results, and this information in this video is for educational and informational purposes only. I am not a licensed financial advisor. I am just one who's been studying this stuff for years. The example and suggestions discussed here are basically not suitable for all individual situations, so always contact a financial advisor before making financial decisions. So Kurv Technology, it's the Titan Select ETF, the KQQQ. This fund aims to actively generate income and pursue capital appreciation from a concentrated portfolio of large cap technology stocks and derivatives globally. The shift is underlying the assets to determined by the advisor's overlook of the growth and momentum. So the fund's distributions right now are looking at about 17% and with a SEC yield of around 0.21%. So a very strong income generator. Now this fund came out in July 22nd of 2024, so we're definitely a little over a year old on the fund. The expense ratio is the one that kicks me in the tail with doing comparisons with other funds. This thing comes in at 1.12%. Gross expense ratio. The net expense ratio comes into about 0.99%. Just extremely, it's on the high end of these type of funds. It does pay out monthly, so there's not a lot there. I can see that in the weekly funds have been up that 0.99, but that's one little thing I have against this fund right off the bat. Let's pop the hood, go a little deeper into Kurv's technology, and what do we run into? The fund has $106 million in assets. Again, a little thorn in the side, 0.99% of the expense ratio. They have 3.8 million shares outstanding. Paid out about $4.19 over the past 12 months in distributions for a 14.56% total yield. Now the fund has had $23.13 to a $30.65 high. And we've been bouncing between that $28.42 and $28.09 range. So we're actually at the kind of just maybe 10% below the peak. We're bouncing around right in there. The big recovery from April, you can see a lot of funds have done this. A huge recovery from April. We've done some really strong numbers there. So we have a 1 year total growth about 24.05%, a yield of that 14.56% for a total return of 44.49. So overall, very, very strong performance, has done very well what they're looking to do. When we take a breakdown, a little finer tuning of the year to date, which would give us from January 1 to the end of April, we can see the growth has not been as strong, 2.78%, primarily because of that April drop off, but it has recovered back and the yield is continuing. You take that 6.86% yield, which is basically over 4 months. So if you took that yield and times it by 3, if it continued doing what it did in the first 4 months, we're above the yield performance. So a lot of times there'll be some drop-offs in different areas. So I don't always recommend that that's just a basic number, but you can see that they're on track or ahead of their 14% that they've had in the past. Total return about 8.71%. So right in track of where we wanted it to be. When we take a look under the hood, what are they doing? 27% in technology, 21% in communication services, 11% in consumer discretionary. So you can see that they're slowly weeding off of that technology side and going, more of a balanced approach between consumer services and technology. While we look at a lot of different funds and we see Nvidia as being the number one thing, with these guys, Nvidia is down to number 11. Okay, the number one fund that they have, Google, Amazon at number 2, and Broadcom at number 3. So they have a nice little mixture to it. That's why KQQQ has such a different appeal than other funds when we say they're in the Nasdaq-100 category. Even though they're playing it with a different game and a different mix to it. They're not on the Nvidia train. They're on it, but it's not leading the pack. Same thing with the Tesla. They're in it, but they're not letting it lead their pack. So let's take a look at the income, the dividend chart. And this is very exciting because you're seeing a very consistent flow. It's a very steady flow. We don't see a lot of spikes up, a lot of spikes down. Kind of almost see it where it was just slowly staying and then it raises and stays there. Now this one has an average about 38 cents a share a month. They've been fairly steady with it. I kind of could put this as that they prejudge what they're going to put out there. It's not their true income that they come up with, because when you see something at 35 cents, and then 41 cents, 41 cents, 41 cents, you can see that they're marketing and they're using the fund accordingly. So this is not all 100% drawn out. It's another area that I have with them. Is the chart looks great, your income looks great, but could it be one that they can cut fairly easily? Yes. It's kind of controlling how their funds are running through it. But overall, very pleased with the dollars that you get from KQQQ. So how are taxes handled on this? The Section 1256 contracts, which is we call the 60/40 rule. The KQQ primarily generates income by selling covered calls on the Nasdaq-100. And with that, they have the index options that give them that 60% of the gains are taxed at lower long-term capital gains rate. 40% of it's taxed at short-term capital gains, which is basically classified as ordinary income. So why does this really matter? It's a significant more tax efficient than other income funds where 100% of distributions are taxed at ordinary income. We've shown some of those already in our reviews that the 60/40 is probably the best way of having it if you're putting this in a brokerage fund. If you're in a Roth fund or a 401k, this can help, but you're not going to see the full benefits of it as well. Now, they also have played around with the return of capital, which is the ROC. So portion of that KQQ's monthly distributions can be classified as return of capital, which is strong because it's a tax-deferred system. So taking that bottom 40%, they could classify it. And then what they do is the distributions are not taxed in the year they're received. They can be done as a cost basis reduction, which means you're going to kick your tax can down the road, and realistically, you're going to move it to that long-term capital gains when you sell the ETF. So I always suggest talk to a tax advisor before you're doing any of this, but this, we have a nice video on the ROC that you'd be more than happy to look at to explain all of ROC across the board. Now we get more into what I always love is the total returns. We do the year to date. You can see at 8.76%. It's had a fairly strong drive so far. Coming out of that April, we were in negative numbers at the start of the year, okay? Because as I've said, this thing didn't know what direction we were going. We didn't know what the administration was doing. We didn't know where are you heading. We're going across the board. We're getting bad press. We're not getting positives. Then all of a sudden the direction was pointed out to us and everything is rocketed. You can see how it's already into that big positives for the year to date, which is again January through April. 1 year, solid numbers across the board, holding at a positive number across it. dropped down to as low as that 15% positive, but generating all the way back up to 44. And that 15% realistically was mostly handled by the yield. So is this good for retirement? Well, as you know, I classify things into 3 different buckets, which is foundation, growth, and income. And this fund here, I really have to put it into the income fund because you are into that double digits, 14%. The yield does sound and show to be a very solid piece, but you can never, it's got the potential of being that solid area. The growth at 24%, can we continue the growth factor of it? I hope we could. But across the board, I think the income is really where this thing needs to fall. The year-to-date numbers show it accordingly. So for me, I say yes. This is a particular fund being into it. They operate a little differently than a regular Nasdaq, so you could actually use this in a secondary fund as well. So you have a full Nasdaq fund going into it, and this one's using it in a different sector, a different way. That's why we always look at the holdings. So for me, income's a way to do it. Let me know what your thoughts are. Is this a fund that you think should be in a retirement fund? Maybe you currently own it. Maybe you like it. Maybe you don't like it. Let me know in the comments below. I'd love to hear from all of you what you think of what we've done here. If you like what we're giving you, hit that like button.
Thank you for watching. Press the